Good afternoon. Welcome to Green Bicep. This is week number 9. Yeah, we're getting to it. Hope your week was good or has been good. It's Tuesday. So, how was it? This year over year, the market, the Nasdaq is down 14%. While the S&P is down 7%. So, the market is weak. And we're going to talk China a little bit here. Sino-Russian relations are solid as a rock and will withstand any test of changing international situation. This is the Beijing foreign minister talking. Xi Jinping to visit Moscow for a summit with Putin. So the Chinese leader is meeting with Vladimir Putin. And Janet Yellen won't be there. It's a joke. And the reason why I put that in there is it's just who you hang around with, or you spend time with, just shows your true alliance. It's that simple. All right. So Xi and Putin last met in person in China ahead of the Beijing Winter Olympics last year, days before Russia invaded Ukraine on February 24 of 2022. The two men announced a no limits partnership where no areas of cooperation were forbidden. They had a video call last December. So they fomented the relationship and they are bound together. So the U.S. just ignores this and we like create this war because Russia was part of Ukraine. Or Ukraine was part of Russia from 1919 to like 89 or 91 or something like that. And so it's Russia owns it, in my honest opinion. But then the U.S. broke up the Soviet Union, and that's why it's separate. But technically, that's part of the Soviet Union, so that's Russian. I mean, I don't know. That's how I see it. It just Hong Kong had weak trade data, and a lot of this data is a lot of what they trade is auto related or machinery, and so I don't. I know autos are slipping off because the consumers dropped down a lot, so it might have something to do with that. But it doesn't play well for China when you see that initially. But I think it's on the auto side, and it might have to do with the function of chips being still in shortage to a degree. I know they weren't having issues prior, but it just doesn't make sense. And the Michigan sentiment is trending up, so that's good. People are feeling more positive, but it is still in horrible territory, so, they have a hangover, but it's just not as bad. They had like 12 beers, not 14. Well, that would be like, say you had 4 versus 7. So they had 4 instead of 7, and so they feel better. Initial jobless claims still low, 196,000 approximately. So the labor force is sticky, and this is part of my thesis. The millennials will drive the future and how employers are able to employ. The millennials are likely to work multiple part-time jobs. And because of that, you're just gonna see a shift in the workforce in general. Wages will have to be higher for longer because of these picky millennials. And there's a few reasons. It's psychologically, the millennials want to control their time, and their time is valuable to them. And also, it relates to insurance costs. It's 10% of salary. Why would someone want to work full time, have a shitty boss, or a boss that just doesn't treat them well, and then versus having 2 bosses or 3, and you just switch job, you kick that guy out, and then bring in a new one, and you get paid the money, and yeah, it would work out quite well. So I think America's going to have to wake up to technology, because technology is partially driving this new millennial employment drive, and I'll have to brand it like. This is not part of the Great Migration that I've been talking about, which I've branded the Great Migration, where everybody's moving from the high tax states, high bureaucracy states to states like Florida or Texas or I guess South Carolina and Tennessee, essentially. And durable goods were weak, so not a folks aren't buying enough washers and dryers. excluding transports, it's okay. So they're still buying some washer and dryers. They're just not buying, I guess it would be vehicles. I got to look into durable goods. It's like when you look it up, it's usually so vague you don't know what is in it. And time is one of those things we only have so much time, and because of that lack of time, you could only spend so much time on each thing, such as research and transports. Where I'd rather be out biking or or sleeping. In this case, Warrior Met Coal. Robust is customer demand. That's the key. It's robust. And Warrior Met Coal, they have exposure to Asia, all over, and their mix of customers could shift on a dime. Because from year to year, I've seen their exposure by continent changes a lot. It's quite amazing. This company prints money. They make coal, or they pull coal out of the ground, and that coal is used to make steel. So this is a play on the infrastructure bills that two have been passed, and money's going to be spent in the billions. And a play on just, we need steel, we need our national independence. If we were going to start to make, assuming it's the USA that makes them, I should have looked into that because I didn't. But so when you make an aircraft carrier, it's steel is what's used, and we're going to be probably building a lot of those too. And the reason why is war. And so there's a lot of cross currents currently. We got the wars going on. We got relationships with China. And I'm not saying any of this is good or bad. I'm just saying this is reality. You got the market like thinking we're in a bull market. These kids have no clue they're good. But I think we're going to see we're going to get a crash. It's going to be fun. I mean, I think Mr. Market's going to surprise us all. And Buffett probably has an entity within his energy company. He probably does it as a joke. It's not Enron, it's Buffett's energy. And they're probably short the market in there and probably loading up on stuff. And they're going to make out a bandit for their shareholders. And they'll probably hide that cash in one of their other entities, and you'll never know. And they'll slip it out slowly when they need to build some CapEx. I'm not saying it's bad. I'm just saying these people they're doing what I would do. If you have money, you could think of things and you could be creative. I'm trying to get to have money. It's still not quite there. Cross currents. Well, I don't charge for this. But, knowledge is something someone can't take from you. I wish I had more of this. So, Fed funds rate, that is the interest rate the Fed charges. There's a discount window, and that's when banks want to lend to get money from the Fed typically. And then the Fed funds rate is the rate that banks are supposed to lend to each other. I mean, that's what I don't know. Read ages ago. And currently, in today's state, banks are parking their money, the commercial banks, with the Federal Reserve, and they're earning well over 4% today at no risk. And that's the current situation. I haven't heard the number in a while, but it was in the low 2 trillions prior. And so, and so that kicked up SOFR, the secured overnight lending rate. It's something like that, secured overnight rate. And SOFR is essentially where a lot of interest rates fall. So as SOFR changes, rates fall. I mean, they say the Fed funds rate, but it's, I don't know, I guess the Fed funds rate, then SOFR, and then they all follow SOFR. And Powell raised rates really fast early on, and SOFR, all the funds flowed into it. And it was a dollar capture of the U.S. dollar from around the world. So there's definitely currency wars going on. There's physical wars going on, and I think this extended interest rate environment is a function of. I see that inflation's up. But the fact is, I think it has to do with China. And it's because why would you suck the lifeblood out of a human being just because there's some inflation? Because ultimately, by raising rates, you're just passing on money from one person to another person. The person that owns a credit card company gets your money. The person that owns the bank gets your money. So it's like this. It's real simple. and everybody accepts it as like, okay, this is the way to stop inflation. I'm an A+ student, right? I got all straight A's. I just listened to my teacher. Yeah, so sorry about that. It's ridiculous. Robust customer demand again. Yeah, so Yardeni is probably going to have to revise his Fed funds rate up. There's quite a few retailers reporting earnings today specifically, and currently 70% of retailers have reported. Well, they reported blended earnings growth estimate now stands at down 22%. So retail, I mean, it's another tell that there's no, it's almost not worth talking about, like saying, oh, we're in a recession now. We're in a bear market. So the Fed funds rate, the terminal rate here is the target rate the Fed aims for, and it's at 4.75. So we know at the lowest level rates are going up to 4. So then you add on like prime and this and that for credit cards, and it balloons up. So we're basically at 5%. This is a terminal rate. I'm surprised it's not higher, actually. I think somebody's behind the curve. There's I don't know, maybe that the white line's a forward of a terminal rate or something, because that makes more sense. The yellow line doesn't make sense to me at 5.4%. Hong Kong exports are down a lot, and they export a majority to China as well as import a majority from China. So that doesn't look good for China, but I think it has to do with this auto thing. And they may be building up for war as well too, planning, and so that would really push up the commodities as I expect. And yeah, it should be fun. I mean, should be able to monetarily make money as an investor if you're like me, following the markets and actually doing something. Even if you don't have a lot of money, you still could learn in the process, and each cycle you'll get better at it, and eventually you'll get to the point where you'll just start to print cash. So my first cycle was 2000, and I had a company called Illinois Superconductor, and I sold the stock, and I took a bus to downtown Orlando and cashed that check. Yeah, it was a few grand, and I was a multi-millionaire in my mind having that. Yeah, so that was 2000. Then 2008, I had Lehman puts. But I didn't go out far enough. I was just whatever. It was new to puts, and yeah. So I messed up that one. Yeah, and then 2020. I went long oil, and I got some reverse stock split on an ETF got me, and I lost not tons, but it was a lot for me at that moment. And I could have just bought Vermilion and probably made 100x on buying Vermilion. Instead, I was just, the experience, I was just thinking options. Every cycle is different. I'm not saying buying Vermilion now, but the fact is I went about it wrong. I should just bought stock in that cycle, and then instead of doing options. And because I would have, oh my God, I would have made out, like you wouldn't believe. So then that's 2020. Then I also went long Bitcoin heavy, and that's played out quite well, even though some of it was stolen for obvious reasons. All these fraudsters out there. That's why you got to own your own keys, like they say. But some people are better off losing it from a crook, because they'll lose their keys. So you don't want to lose your keys. You got to be responsible person. But there is a thing called multi-sig where you could have multiple keys, one key, but it has 3 signers or 2 or whatever you want to set up, and so that will limit the risk of losing your valuation of an asset. The title on this is interesting. China. So in this here, we're looking at exporter passenger cars. China's zipped up a lot. Well, at the same time, you have Germany's dropped down. So China's overtaken them. And over here, we have U.S. imports have decreased 0.2% thanks to bill over here on Twitter. So I'll watch that next month and see if it continues. It's a positive. Because the story is inflation. The Fed is saying we have inflation, so they're going to raise rates essentially until it'll take 24 months, but everybody will have their liquid cash will be gone for the lower half of the society, and then they can't buy anything. So the Fed will be happy, and inflation will drop, but they'll be flat on their back and more dependent upon the government, and those on the other side of the trade will be happy and wealthy. So it's a scam, and I say that because it seems obvious to me. But I used to shovel cow shit for a living, but I was also like 9, so 10 maybe. So anyhow, let's keep moving. So consumer credit, the bottom 50% make up 56 or so percent of consumer credit debt, 2.6 trillion. The key here, though, look, is the vector. It's going whoosh. So it's going up. That means more. The average Joe is getting poor by the day because of the actions of a few people to stop inflation. But that's baloney. Inflation is if you don't have enough factories, if you don't have enough goods, you have a high price inflation, and if you have a lot of competition, then you're going to have lower prices. So it comes back to the fundamentals. In the current state of the world, they're trying to restrict energy, oil, which is the lifeblood of society. Who owns a car here? Raise your hand. Who owns a car that takes gasoline? Raise your hand. Right? Who drives an 18-wheeler? Raise your hand. Who sees an 18-wheeler every day? 18-wheelers move all of our goods. So we need energy, which is equivalent to petrol or fossil fuels. And the World Economic Forum is a group that wants to clean up society energy, but they're doing it in such a way that I think it's restrictive to society. So I disagree. I don't think you should do what they're doing because I think it's gonna harm too many people in the process. And how do you harm people? Well, prices are going to go way. Yeah. I mean, on top of war, holy crap. This is going to be wild this next decade. People have no clue what they're in for. Yeah. And I'm talking, when I say that, I say the elites. Like, they're going to just be flat. And then the average person's just going to be like, I think the average guy will, like, society is going to have to revert back to more local. And yeah, it would just, big companies are going to be, I think they're going to be in big trouble, big cap. Unless they're providing like certain goods. Just people are going to have to, it's just going to be more of a local thing. Because when you don't have money, you're not going to travel. So unless you're in a city, you're not going to want to drive 15, 20 minutes because you got to, you got to pay like $10 a gallon for 1 gallon of gas. $10. It's kind of high, I think. And maybe even higher at that point. And so in the hyperinflation that happens in other areas, they're just, it's just going to make certain goods that probably metal is in certain goods. So metal is going to be like gold in the future. Certain types of metal, I don't know what ones exactly, but the metals that are used for related to equipment and war, I would say. Yeah, it's gonna be wild. So permits are flat, and permits and housing in general leads the market into a recession, or let's get rid of recession, we'll say into a bear market and out of a bear market. So it's a leading indicator. Existing homes are dropping. We have new home sales. They are actually improving. That's good. So people like new homes. People with good credit and people have cash buy new homes. Excellent. Pending home sales are still off 24%. So overall housing is in bad shape and not improving. So what the Federal Reserve will do is at a certain point, they're going to push the economy too far, but they're still going to keep raising rates. But I think it has to do with China, and they just want more control of the world. They want the U.S. to be the world leader and actually own the world. So I'm saying all that just based upon all these actions. It's only logical conclusion. So when you, let me go back. Yeah, so what they'll end up doing is they're going to start buying mortgage-backed securities while at the same time, like, keeping rates high. So you'll see mortgage rates start to drop. This is my guess, is this is in like 2 years. And I'll have to think about the timing that more. I like just said it. That's like you don't want to stare at me for 5 minutes. So Baker Hughes. So Baker Hughes is dropping down, and it's at 600. And this plays into my theme of oil, is something I think is going to be very attractive. And so you want to be studying the companies that are healthy. And it's not the U.S. oil drillers. They're garbage. From what I've seen, and Shabam is sure that, and Shabam is a investor as well as educator on oil. He's one of the best I've seen and heard. And he's gone over the basin in Texas and going through each area. Then he gets into he has presentations where he's discussing how to actually the equipment works and the whole process. It's quite fascinating, and I'm going to go through, listen to all his contact, and I'll put him in some of these videos in the future because he's doing such good work. But like that industry as a whole, like if the U.S. is smart, they keep it open, and it will provide an outlet because Canada is Canada, and Canada is part of the World Economic Forum. So unless the U.S. government gets involved in intelligence agencies and kind of gets Trudeau out of there, Canada may not provide us as much oil as we expect, and it might be a leveraging chip that nobody's expecting in this process. I don't see China and Russia as our enemies. I see a different group. These decentralized World Economic Forum people. Because by taking energy away, like I have an investment in Colombia, and I was doing research, and the leader of Colombia is in Switzerland, and the article talks about how they're no longer going to do new oil drilling in Colombia, and then he talks about it's all because of World Economic Forum advised him to do that. So that way, if he needs a handout, he doesn't have to go to IMF, International Monetary Fund, which the U.S. owns a majority of. So he'll go to this other elite group. So it's like this. It's wild. There's a polar shift going on in many layers. So PCE, so this is inflation, and it is up. It's almost up 5%. Wow. Dallas manufacturing is down 13.5%. Pretty crappy. China new loans, I put this in here. It's a positive reminder. I'm looking forward to seeing Feb data. And prior, they started pushing money into the system, and hopefully they'll continue to do so. Because when China's strong, then it just provides, growth is healthy for everyone. But it will spur potentially inflation, and that gives the Federal Reserve more of a reason that they can raise rates. But they're going to do it regardless. They'll manufacture it if they have to, because this is more about their long-term objectives. All right, more Chinese stuff. So the current sentiment is greedy, semi. But this is likely not going to work that well in the current state because we're in this bear market. The trend is down, and indicators get out of whack. But I want to keep it so we track it once things normalize, and it would be a good way to trade. And we may get some extremes where it's so obvious that we want to trade off of, too. I don't know. And this is another one where you could see at extremes with the fear of greed index that typically the market will be a short-term top. So we're at that point. Also, we'll go back here with advance in declining stocks in the current state. More stocks are declining, but when you look at like the Dow or one of those indexes, it will look like the index is doing pretty well because it's only 30 companies in the Dow. Or the S&P 500 is heavily weighted towards Apple, and Apple's up, so it pulls the whole index up. But when you look at like the New York Stock Exchange advance in declining stocks, you could see it's been pulling down. And it's going down fast, faster than many other recessions because I went and looked. So it portends things are not going to, I expect a major crash coming up. And I think it's going to be sooner than later. And most people will think next year. That's what innately I thought it was, but when I look at the data, meaning the data, and I'm not talking about cash flows, or I'm talking technicals and breadth and all of it. And yeah, it just, to me, it looks like we're ripe for like a crash, a hard crash. And with these new daily options they have, is potentially that could be the catalyst where someone overexposed in a daily option and loses, say, $2 billion. And then another guy loses two, and then they have to pull money here and then go to there, and then it creates this like cycle. So I think that's going to be the catalyst for the crash, or the daily options, and that might give a cover for the commercial mortgage market, which the private equity firms are heavily exposed to, and they're upside down, to maybe do something crazy while the market crashes, and uses that as an excuse, and probably get the Fed to bail them out. Because all these private equity firms, it's they're not probably sleeping too well at night. They're so smart, right? But they are smart because they have the connections, and those connections will bail them out, right? Because when the market's crashing, they'll use that excuse, and I mean, not totally out, but they'll still be rich and, proud of themselves. So, and rich is a relative term. If you have peace, you are rich. So some of those people are highly wealthy, and wealth is just a number. It's, for me, I'm a very if I feel like someone's a thief, it eats me up inside. So that's just unfortunately and fortunately how I am. So the Fed is in terrible bind. It's entirely possible that growth is negative in 2023, but inflation is still above 3% and unemployment is still sub 5% as labor hoarding becomes a defining feature of the coming recession. Exactly. People don't want to work when you have you don't need to work because it all disappears. So if you don't, you're better off just living a minimalist life, and that's what people are going to. Then the millennials are choosing, we're going to continue to choose more part-time jobs, and that will change the dynamic of society. Yeah. Eventually, this will put a squeeze on the health insurance companies, unless they increase their rates a lot. But I don't think they can, because it's like 10% of someone's salary. So 10% of my salary goes to insurance, right? Then at least 15% of it goes to taxes. So, I mean, do the math. So we do 0.25 times, what am I doing here? 12. Yes. So that right there, 3 months. Oh, this is comfortable. Wow. Never knew this could be so nice. So 3 months of my job I think I need to move. 3 months, I can't even say it. 3 months of my job goes to insurance and the government. It says, so that's 9 months. And you know how many days off I get a year? How many hours I sit here? Oh my God, I'm dying here. And if I was doing this all day, I wouldn't want to do this all day. So the millennials value their time. And I'm not a millennial, I'm in my mid 40s. I saw the, many crashes, 2000, 2008, etc. So, yeah, and I see it too. So I think there's going to be millennials and some Gen X going this route. The equity markets may have one last stand before we fully price in the earnings downside. We think interest rates and the US dollar both need to fall for this to stand to have a chance. So basically, Mike Wilson saying that the dollar needs to lose value to other currencies. So if you go to Europe, Europe will be worth more. You got to exchange your currency if you shop in Europe. right? For those that haven't been. You can't buy stuff in Europe with US dollars, okay? That's what I'm trying to say. And interest rates need to come down. And that's not happening. So basically what Mr. Wilson is saying, what, Mr. Wilson, what show was that from? Mr. Wilson. Yeah, so he's saying the market's going to crash. Mr. Wilson. Now every time I hear his name, I'm going to think of Mr. Wilson. I'm cursed. What'd you do to me? Don't mess with me. Staring at? I see you. I was sick for 3 days. Last week, I worked so much that I collapsed on Friday. Before 5 o'clock, I collapsed. And then at 3 in the morning, I guess it was Saturday, 3 in the morning, I was shivering. Yeah, I was like done. Yeah, that's working too much sauna. So I think I was dehydrated, but it was a combination of the two. So go easy on me if you think I'm acting silly. I'm Polish, Polish people could act silly. Do you know any Polak jokes? How does a Polak rake the leaves? He's up there raking away, then he climbs down and picks them up. That's not funny, is it? How does a Polak kiss a woman? A girl. How does a Polak kiss a girl? I'm Polish, so I could say this. He licks her face. It's nice and salty. That's a dumb one. How does a Polak rake leaves? I don't know. I don't get that. What's a Polak? How does a Polak tie his shoes? He can't! The Polak can't. It fucking... I cuss. The Polak can't tie his shoe. Here's one. How do you kill a Polak? You send him on a plane to Russia and it crashes in a fog storm in 2011. Half the government gone. Yeah, and actually it was posted on YouTube was a video of after that crash. There's people running around shooting. It sounded like 22s, little pop guns or something. And so I had a company called News on Toast or whatever, a side gig. And I quit it because I don't know why, like the catalyst. I wasn't motivated and I wasn't encouraged. And I didn't have the vision. But I did have the vision because that's why I was doing it. But I was not a leader at that point, so I was like listening to other people's opinion. Everybody's like, "Oh, that won't work." That was in 2011. There was like hardly any websites like that. It was just Drudge Report. I don't even think Newsmax existed, so I was way ahead of the curve. So anyhow, so there was a video on YouTube around that time before they cleaned everything up, and it was the Russians shooting other people, and the plane was there and the front was smoking and you hear people running and see them walking. And then like 2 days later, I'm looking at the news and Putin's standing there in front of that plane, like whatever, staring at it, and it was still smoking a little bit, but it was the same angle, or similar angle, but it was like remarkable. I almost fell over, and this is in 2011. Yeah, so I posted that video to my newsontoast.com website, and I don't know whatever happened to the video. I tried finding one other time. I don't know where it is. They probably deleted it. Yeah, I probably beat that CIA analyst at it. I bet you I did. So let's see. February 23. We have. This is. Actually, I didn't read this one. Some businesses' contacts appear to be keen to retain workers even in the face of slowing demand. A policy stance that proved to be insufficiently restricted could halt recent progress in moderating inflationary pressures. So this is the Federal Reserve. So they're saying because the companies are refusing to lay off people, it's causing them a problem. And basically, they're admitting to the fact that they want to, the way I read this, they want to lay off workers. They want them to quit and get laid off. And so it's just quite amazing from my perspective. So here we have the looking at the difference in two different types of bonds, it looks like the spread in, typically we get a crash in the market right around the point it hits zero, and we're right now over close to zero. Right before the 2008 crash, 79 crash. One of these it didn't work for, 29. Right before, then the market like took a big, but when 29 crashed, the market went like, oh no, I'm sorry, that's the 87 crash. So the 80, it's not on here, but the 87 crash was I don't know what the 87 crash was. I think there was something shady going on there. From what I could tell looking at the data, it doesn't add up. So I think something shady happened in 87. So the 87 crash, the market went straight down, and then within like 4 months, I think it was 5 months, it was back up. Oh yeah, the 87 crash. I think that was like rigged. Yeah, that's the first time I ever said that. It just doesn't add up, without a doubt. So yield curve inversion, and currently our yield curve is inverted. It's so steep you could fall over. And this shows it here, and what happens during the yield curve inversion. You can see unemployment follows this. So we're going to have the yield curve fix itself, and this blue line is going to shoot up. Or actually the black line would shoot up, and then you'll see unemployment shoot up with it. So we're going to have unemployment like... because of the stickiness of the employees, we're not probably going to have the same type of unemployment, but we're definitely going to have higher unemployment. It just won't be like, it won't be historic levels in certain industries. So commodity super cycle, I was thinking about this prior, and the more I pressure test my thought processes with war happening, I'm confident that we're likely to see one, and there's just multiple reasons, but I expect that to happen. So it's just a matter of timing. Yeah. So, and this is a chart I'll remove, but essentially the yellow line is that's when the Fed started raising rates. Typically the market runs up. This time it's not happening. No. We have tech. Why is it not happening this time? It's really a function of a combination. I thought through it before. It's a combination of a few things. But it's really, I mean, tech is just weighing everything down, and you can't deny what's happening at this stage of the game. So we're going to get into my list of things I like, and we have the bonds are at 4.8%. Gold is always wonderful, and then I have Bitco, which is Bitcoin. The next halving is 2024. So at that point, the miners that support the network, the number of Bitcoin issues is going to be cut by 50%. So that's why there's usually a price increase every 4 years. It's just supply shock. Now, interesting enough, the mempool, which is essentially like Visa, they get to transactions and they have to sit there and wait before they get pushed through. Well, the mempool for Bitcoin has been all clogged up. I think that has to do with data being stored on it, maybe passwords or intelligence information data. But they're saying it's pictures, but I think there's more to the story. Because where would you store like the most precious data in the world? You would store it in the most secure place in the world. And today, the most secure place in the world is actually on the Bitcoin blockchain. There is the Bitcoin blockchain. There's Bitcoin the network. There's Bitcoin the coin. There's Bitcoin the nodes. And obviously the network is, there's the miners, the Bitcoin the miners, and they support the network. So they're a function of that. So those are like the core like things of it today. And so it's, when people like don't know shit about Bitcoin, like, I mean, it's complicated, super complicated, but it's a technology. That's all it is. And so the coin on the is just a coin. I mean, it has value. The only reason it has value is because the network is so secure. So you could get like the super secret passwords to the intelligence agencies and put them on the Bitcoin network, and nobody could ever get access to them. It's that. So the value of Bitcoin, I think Jason Lowery's thesis came out. He's going to MIT. He was sent there. He's part of Space Force in the DoD, and he was sent there to, I don't know if it was by choice or whatnot, but he's sent there, and he's wrote his thesis about Bitcoin, explaining its functionality in society. And it really comes down to proof of work, where that provides strength to a network, the type of the way it's structured. And the way it's structured is it takes energy to secure the network, to simplify it. And because there's so much energy securing the network, it makes it so you could put a password in there and it's encrypted and nobody could get it because it's all this force field around it. And that's where the inherent value, and Jason Lowery talks about this, and my buddy of mine was kind enough to give me the book, and yeah, so I'm looking forward to reading it. And it's like 400 something pages, but it's quite fascinating. Like, but if you were to read it, you'd probably want to listen to him a few times on YouTube, because you got to kind of get at the same wavelength. Otherwise, you might be just like just whoosh. So it's very deep thinking, and it's really, it all comes down to energy. Then it gets in. Then separate from this is you got the World Economic Forum trying to take out oil out of societies like Colombia, where I have a small investment, in saying you can't drill anymore. So they're going to control society because you can't move your vehicles, you can't do things without energy. I mean, that society improves dramatically with each increase in energy. So you have one side, you got the World Economic Forum trying to shut down energy, destroying third world nations and taking control of them away from the IMF, which the U.S. controls, right? And then you got the U.S. raising interest rates, sucking all the U.S. dollars out of the whole world, trying to fight the World Economic Forum. And then you got Canada up here with tons of oil, which Trudeau's part of, but he's part of the bad guys, right? The World Economic Forum. And so if we need oil, we're probably going to get it from Venezuela, and we've been getting oil from Venezuela, and there's. So we're starting to align hopefully more with Central and South America, and having investments there will play well in the future. Then Petrobras today, Brazil announced a tax on them, and so I know I don't have any investment in that, but it's a beautiful company and all. But the fact is, the government slapped a tax on it, just like Europe got slapped with a windfall tax. So if profits go above X%, they're going to take a certain percentage of it. As of December 2022, Europe did that. And so there's a company called Vermilion, and they spent like, I don't know how many billions building out infrastructure for gas in, I don't know the details, but the fact is they spent a lot of money. And now they have this windfall tax, and Russia's taking away like resources out of Europe. But then Vermilion is a Canadian company, and they're kind of stuck in the middle. Like, what do we do? Do we supply the natural gas? We're going to get a tax, so we're giving it away for free. I mean, it's you don't tax stuff like that. It's just not right. So there's no incentive now for Vermilion to do any more. They're going to not do a darn thing more. So Europe just chop one leg off, essentially. Bad negotiators. Yeah, these people, I don't know. I don't know where. So Warrior Met Coal, HCC, has robust demand. And so they make metallurgic coal, which is used for steel. And it's a great company, U.S.-based, and they're fairly high growth, trading at a major discount. It's a Go America company, just like Nucor, USA strong. They make steel all over. Great company. And I'm going to add more to this list. I just haven't had time. I want to fix this up. And then we have oil. I expect oil to do extremely well in 2024, 2025. And we could see oil if we truly get war, we could see oil in the hundreds of dollars per barrel. I mean, in like people that are buying these stocks now, like the shippers and this and that, I mean, they're going to look like geniuses in 5 years. And that's how the cycles always work. It's like it's a big rotation, but there has to be there has to be a catalyst, for things to change. And in this case, it's war, essentially. And today, actually, the dry bulk shipping index was up, I think, 9%. So that's good for Eagle. It's good for Golden. It's good for Zimmer. It's good for, there's other shippers. Anyhow. Canadian oil, Trudeau, surge. The miners, we talked enough about that. I think that hedge funds are buying these hand over fist. I think they're buying the miners now, and you're going to see them go up quite a bit if Bitcoin does what it does every 4 years, what happen. Now, governments may try to get involved, but I think given seeing Jason Lowery's thesis, from Space Force going to MIT, I think the U.S. government is definitely pro Bitcoin. They're just not pro scammers like basically anyone FTX, like all these people that were pushing FTX. They're the scammers. So I would say the athletes and stuff, they were not obviously, but anyone in the financial industry that was pushing it, FTX or that sort, write their name down. And, technically they should be in prison, and they probably won't go because they're just, whatever. There's the shillers. There's followers just trying to make lazy, easy money. Those people really, they're going to be on these shows. I mean, you just got to, think a little bit about that. I'm not going to name names. Yeah, it's disgusting. Yeah, so the next happens in 2024. Should do all put options. So hedging now is a great thing. Hedging with some put options. And generally try to go out 9 months to 24. So the contract you buy is good for that long, the duration of it. And if you buy anything shorter, just expect to lose 100% of your money. I've been there and done that for sure. 2008, Lehman had those puts, but I was young and I didn't know better, right? Safe Bulkers. Yeah, this good company. Ocean Shippers, same thing. Grand Terra, that's the Colombian energy company. The dollar strengthened, yeah, and so that would make emerging markets more attractive to buy because the price is going down. But if you're already, you would just want to watch and tactically add to it because it's not like buying a car. The price is changing daily. When you go to the lot, it takes time for it to change. Zim, that's an Israeli shipping plus I would call it a technology company. They're very impressive, and I wish I had more exposure to them. It's just given I expect a crash to occur, I don't want to. Yeah, it's likely a crash. I can't shake it. So EWZ short. Oh yeah, that's another play. I don't want to give all away my tricks. That's a currency one. Anyone with knowledge can put one and one together. Actually, I should say exactly how I do all these because then you provide more liquidity. So with EWZ, I'm actually bought some puts. And the idea here is if you look at well, I'm not going to get into it exactly, but it's a currency related play, so you can figure it out. Qualcomm, because arbitrage is a real thing. If enough people follow what you do, then the opportunity will go away. It's like the whole efficient markets hypothesis, it's not efficient at all, right? It's only efficient when all information is free flowing, and that's rare. Discover, I like Discover. I think it's an amazing company. I own 0 of it, and that's kind of not good because it's just a beautiful company. I think they're just it's a Warren Buffett type company. If he doesn't own it, then his analyst should be fired. That's my opinion, unless they're cooking the books. I don't think they are. I want to see. I would like to see who the CEO is and read his bio because Discover is knocking it out of the park. I'm not going to get into why now. Bank of America special sits news. Yeah, so they're talking about the banks, and a buddy of mine also mentioned the banks, so I threw Bank of America in here. I think it's watch the banks. I expect a crash to happen, and I'm talking about Bank of America because you don't know. I mean, the Fed could come out and change course, and the market shoots to the moon and never comes back. That's how it works. But the fact is, right now, their message is they're going to raise rates indefinitely. If they do, they're just going to destroy U.S. economy, suck all wealth out of all the bottom half of society, and that will be that. But they may not do that, and they may change their mind for whatever reason. So you got to play both sides of it in the sense like right now I'm very as little market exposure as possible because I think there's too much of that risk. It's like a tail risk, but the tail risk is shrunk. Or kurtosis, I can't remember what it's called. Yeah, so that's the list, and that's it for today. Let's look at some commodities. So I did look earlier, and I was shocked because overall inflation is hot, and I was like quite disturbed. This is my second run of the video. I did the other video that was like about the same length, and I think it was a better video, but I had no sound. Yeah. I think I should fire her. Too lenient. So what do you guys think is going to be the best performer, meaning highest inflationary item for the week? I'm struggling seeing here. Natural gas is at the top at 23%. Woohoo! You gamblers got lucky, because I know a few of you on Twitter. They take risky bets. Oh, actually, hold on, no. Molybdenum, I guess. That is up. Oh, actually, no, I'm sorry. That is it flat for the week, but up year to date is 120%. And electricity rates are up. Oh, like a lot is going on. So I guess because of natural gas spiking, that caused electricity to go up. That makes sense. So it's not the weather. So I bet you the temperature hasn't done anything too crazy. Otherwise, we'd probably have higher percentages here. And then we have carbon permits up 28% on the year. Should we get into that business? Well, the CRB index commodities, which is basically everything, is up only 4% year over year. So you know what? People, you could still rake in money. People could if they play their cards right now. Move and act fast. 20-25 calls on certain commodities might do well. Oh my goodness. Eggs for the month are down 31%. But year over year, eggs are still up 47%. You know, it's a boring week. I can't find anything exciting. But overall for the week, there is inflation. This does not look good at all. Inflation is hot. This is like sucky. Really sucky. Let's look for the month. Month is not quite as bad. Thank God. Yeah. It's mixed. Metal's looking pretty, yeah. So we're, I running my algorithms on my machine learner, and it just came back. Like, things are complicated. Machine ML right here, right? ML. So that's all we have for today. So in the conclusion, let's just do a little market wrap. So over the last week, the market has been down year to date. The market's trending down. Consumer sentiment is improving, but it's still in a poor level where people are not happy. Housing is weak, and it continues to get weaker. Inflation's pretty hot, and it looks like it's staying hot, unfortunately. And the Fed promised to continue to raise rates, so we get that gift of shifting money from the poor to the more wealthy. Because who owns the assets, who owns the companies, and who has debt typically, at least on consumer? It's the poor. Then and even with the small, so anyhow. So we know that's happening. There's going to be a wealth shift, and a lot of people are going to get screwed. At the same time, wars escalating. We have China come together, and we got stuff happening there. We got Brazil raising taxes. We got Colombia seeming like they want to be a democratic nation. And so we have positive I would call it in that region as well. And I don't know. There's the key things are like with China, it's opening, but there's weakness in Hong Kong, so we're like in cross currents there currently. And but if we do get a strong China open on top of already inflation ticking up, we're going to see rates well above 10%. If you have a home equity line of credit, I have one, and my rate is probably going to be like 15%. So that's a lot. So if I knew rates were going to go up, but I just didn't think at the pace they were going to go up. So that's I didn't think the Federal Reserve was that malicious and neglectful, because when you plan your life, you don't expect some institution to do something ridiculous, and so now you're caught in a situation where your cash flow is caught. And on top of that, you have property taxes going up, you have insurance going up, and then in our neighborhood, like the homes are all new, and all the people's mortgages are all going up. I think on average like $800. Yeah, so their mortgages are all going up because somehow that was all miscalculated. It doesn't make sense to me. So these, like, everybody's being squeezed out in this community, and it's a very nice community. Not a lot of very education. A lot of people own many houses, but the fact is, if you own more than one house, it doesn't matter if everybody's being squeezed and people stop paying rent or miss a month, and then their bills are going up. I mean, you can make $250K or more, and you could be in a situation where you're like planning for your future, but you didn't expect some institution to do something only a child would do. So I don't know. It makes you like think about how do you plan, right? How do you plan and make money if the ground you're on, the base is sand? So we're basically trying to build businesses on quicksand. I know El Salvador's pushing Bitcoin. Maybe they will have actually a solid ground, because they have a region that is going to be a tax-free zone. It's not a bad idea, and I would be more apt to live there where I knew the sand wasn't going to shift. And people are probably going to move to Dubai. You just don't want the sand shifting so you can't do business, because ultimately you're spending time and energy as part of your life. And someone takes your money away, you're probably going to have to work more hours. That means that's less time reading a book or spending time with a family or doing what I'm doing here. Like now it's almost 9 p.m., right? And I worked all day, and yesterday I worked like really late, and so it's like, and I worked on this probably 2 hours yesterday. So, but the fact they're stripping all that away. So we're building a house on quicksand currently, having the Federal Reserve as our basically there, and that's the ultimate problem. I think one with the U.S., and then number two is the war is how we're opening 4 bases in Philippines right now. And then December of 2022, Japan said they're going to build up their military, and so we'll probably provide them whatever. And so it's this unhealthy build up to create war, essentially, and that's to stir the economy, essentially, in a way, or enrich that group. But you don't. It's technologies will win war, and information will win war more than anything. In the threat of being annihilated will win war, but it's really information, because then if you have the flow of information, you could stop it, boom, and they never could get past that point. So that's where we need to be investing our money and not wasting it in freaking Ukraine, because yes, we have total assets in the U.S. of a lot. Like if you took all of our land and stripped everybody's bank accounts, right? Then you could pay off our debt pretty fast, I think, like that. So, but then you're that's theft in a way. But that's why Congress doesn't care, because they know they could take your money if they wanted to. They could tax anything they want. So, I if I was a politician, I probably wouldn't worry, but morally, I would do what is ethically right for society versus like just like having scotch and like living it up and then not basically being weak, because the military industrial complex, not that they're bad, they're doing their job, they're just doing their job and they're pushing, right? And that's good. But the congressmen are weak and wimpy or whatever, and so they're just taking it, and it's like that's how people are. They'll just, someone's like taking your land and they'll slowly take it away over time, it's just innate. So essentially, we have weak leaders that are allowing this to happen in Congress today. So that's a function of it too, our weakness at Congress. So that would be number 3. So those are probably the 3 biggest threats. And then you get to 4 is really just manufacturing of goods in the U.S. and the supply chain in general. But we need to bring more to the U.S. because we're using our U.S. dollar as a way to create goods, but it's a dollar that is backed by this large military and the threat of destruction. Plus, we are a good country and we create a lot of peace at the same time, But what gives the dollar its leverage was it was incorporated, obviously, after World War II and so on and so forth. But now that our credit worthiness has dropped, considering we're willing to use SWIFT as a weapon, right? Our credit worthiness has dropped. And because of that, everybody's looking at the dollar like, okay, it was fun when you were semi-honest, but now you're just being a bully. And nobody likes bullies, right? So the United States is the United States of bullies, or I'll have to brand that as well. United States of bullies. The United States of bullies. I like that. So the U.S. is the United States of bullies, and because we're the United States of bullies, we're losing respect. And if we want to maintain our dominance, we might want to humble ourselves and pray. And I'm being serious there, because people that are not humble typically just feed off of other things versus looking internally. And I don't know if those people have peace. I'm not that type of person, but the fact is, it's kind of like a drug. In order to keep that state of feeling, they have to continue it on and on and on. And you got to continue to pray, though. Like, you'd have to pray, like, to keep that state of peace too. So you got to pray versus destruction. I don't know. It seems like one's better than the other from where I sit, but getting totally off topic. So that's all I think I have today. I appreciate your time, and this is Green Bicep, and my plan is to likely be here next week. It just depends on what the flow is a thing, and I'm going to do a bit of studying over the weekend on what's happening, and just want to feel like I have a pulse on everything. I have a few questions I got to look into to truly have insight of why certain things are happening. But from a standpoint of flows, we know flows are starting to shift because the U.S. dollar's gotten stronger. Prior it was getting weaker, and the Chinese yuan has gotten weaker. So there's dynamics are changing. So that means more risk is getting. There's more risk, essentially. Risk on. The VIX has gone up, and so it looks like everybody's. I think January was an opportunity for a certain group of people to get out of the market and sell, and that was set up with fake economic data. It doesn't make sense, the employment data. So whoever released that data was helping somebody else on a certain position, and so they made hundreds of millions, or they just got entrapped. And that's what happened in January. That was complete manipulation, without a doubt. And my source is me just having intuition and being smart. So that happened in January, and so now the market's starting to finally follow its course. And there's still manipulation going on. You could kind of feel it, but it's nothing like economic data where then the market shifts and someone's pumping money into the market. Well, the Fed's balance sheet was a little off. People were talking about it didn't make sense, and at the same time the market starts to pump, and then we get fake economic data. And then at the same time, China or Japan was having this whole thing with the yield curve ready to blow out. Yeah, I think it might have to do with Japan, actually. That's probably it. The Japanese, I don't know how many U.S. equities they own. I know we've been providing credit dollar swaps to Switzerland, so Switzerland's upside down, and Switzerland's a lot of U.S. equities. So they could have been upside down, trapped. Norway, tons of U.S. equities, tons of Apple. They're probably trapped, just based upon the one interview I looked at him. He looked like he was trapped. He wasn't happy. I could tell you that much. So I think that's it for now. Appreciate your time. This is Green by Sup. I'm out of here. Thank you.